Okay, guys, good morning then. Let's get the week rolling. So, I've got some equity charts here to kick things off, looking at the more medium-term daily charts. Never a bad idea, in my experience, to maybe at the start of each week, just always refresh your memory on what's going on more medium to long term. It's so easy as you're going through the week to kind of get dragged into shorter time frames and then eventually just kind of lose sight as to perhaps where these markets are going. But so I've got Euro stocks top left, DAX top right, S&P bottom left. Obviously all of these markets are pretty elevated, the S&P being the most notable of those, trading just shy of all-time highs still. Of course, it's been a bit of an uneventful, let's be honest, it's been an uneventful 5 weeks for the S&P. We had that powerful move post-Brexit, and then we broke and made new all-time highs, of course, as we went through the mid part of July, and kind of ever since we've been up, let's just say, anywhere above 2150 roughly is really where we've been drifting for the last 5 weeks, and we continue to do so. You can see that the size of these candles are tiny, so volatility, of course, has collapsed, as really investors are pretty unsure what to do now, whilst as of yet there have been no major risks that have materialized that have been strong enough to persuade investors to panic and get the hell out of here. Despite Brexit happening, it hasn't been the risk that's led to that panic, and there's reasons as to why the US equity market sheltered from that. It is playing a role as a safe haven. The equity market of the world's biggest economy. There's also a lot of dividend yield in here, so definitely a big yield play that's enabling the S&P to stay up here. So you haven't had that downside catalyst as of yet, but at the same time, you've got to be a pretty optimistic individual if you want to start buying the S&P at 2180. Can the S&P carry on moving up? And the answer to that is it certainly could. I think it's naive to assume that this is too high and it's impossible for it to go higher. I think whilst we still have this kind of new normal, which is interest rates lower for longer, suppress $13 trillion of bonds in this world that are yielding in negative territory. So that's a powerful catalyst for people to stay in this market, literally, because they've got nowhere else to go. So the equities are still very lofty. Europe certainly had a bad week last week, drifting lower pretty much every session. We're just up on the day today, but still very much around about Friday's close. Let me just turn that down a second. Now, with regards to Euro stocks, just looking technically, and the DAX, there are a little hint of a negative signal from Friday's session as we've broken down below this kind of rough upward trend line that we've seen over the last couple of months. But it's pretty quiet start to the week is how I'd describe it so far. We've had a pretty mixed session in Asia, not too much going down. Nikkei 225 up, benefiting from yen weakness. We've had a Kuroda comments from the Bank of Japan hinting that they can do more, so a little bit of yen weakness that's enabled Japanese stocks to drift higher, Chinese stocks slightly going the other way, so not too much in it. Just a side note, the Hang Seng, this was the first day of the Hang Seng circuit breaker, which is a new breaker to prevent the market from collapsing too far in any one day. The only reason I mention this is because when the Shanghai Composite introduced their circuit breaker on the first trading day of 2016, the breaker being if the market drops 7%, then it halts for 15 minutes. If it then drops another 2%, well, it closes for the day. So you can have a maximum downside of 9%. It's just that when the Shanghai Composite introduced this on the first 2 days, in fact 3 out of the first 4 days, the circuit breaker got triggered. But the Hang Seng one has begun, its life has begun, and it seems to have had no major effect. So yeah, pretty quiet this morning. I just want to show you the calendar for today, actually, because it's actually pretty quiet today generally. So let's just get our mindsets in the right place here. We're not expecting any major news flow. Data-wise, none of this stuff on this calendar is of any particular interest, okay? That doesn't mean to say there's nothing happening this week. And in fact, before we look at any further on the charts and so on, let's just have a look at the week ahead. So here's the calendar. So as I've said, Monday, nothing. Okay, now that doesn't mean to say there's nothing important this week, and actually it's all building towards the big event which comes on Friday. But data starts picking up tomorrow. As you can see, we've got some Japanese manufacturing data. So it's manufacturing PMI data. These are numbers, preliminary numbers for August. And so we'll get those numbers from Europe as well as from the US as well, actually. Some housing data and some consumer confidence numbers. On Wednesday, we get German GDP for Q2, UK mortgage numbers, more housing data from the US, then certainly an important Department of Energy oil number. I'll talk about oil in a minute, which perhaps has been the more interesting of the markets so far this morning. Thursday, big data out of Germany with their IFO business climate number. Traditionally, perhaps it's always used to be the kind of most important data of the month for Germany, so that's key. Durable goods, jobless claims. We get services PMIs out of the US. The Jackson Hole Symposium begins. Now this is going to be the big event of the week, except that it's not really on Thursday. It's happening on Friday, because this is where Janet Yellen is delivering a major speech. This will be at 4 p.m. We do get an updated revision to US GDP for Q2 before that, which is important given how weak their first preliminary reading was. Is there any scope for that to get revised? We get UK GDP data as well. But yes, certainly Yellen, 4 p.m. Friday, definitely the big event of the week. Also, I think it is on Friday as well, just on a separate topic, we do have Merkel, Hollande and Renzi. That's the heads of the German, the French and the Italian governments meeting with Tusk, and this is to speak about Brexit. Okay, so we might get something out of that meeting, maybe more guidance now that Theresa May's in office, maybe a bit more guidance as to how the Europeans are thinking ahead of what's likely to be an important year next year as negotiations get underway for the Brexit. So that's something to also be aware of. But yeah, certainly Yellen on Friday is the big event. So before we talk about oil and stuff, let's just talk about Fed commentary, because it was quite an interesting week for Fed speak last week, and certainly a concerted effort from the team to be more hawkish. And Dudley kicked things off on this on Tuesday. Dudley, who's traditionally pretty dovish, said that a September hike was possible, and that we're edging closer towards the point in time where it would be appropriate to raise rates further. So that was Dudley getting the ball rolling on some hawkish rhetoric. We then had Fed's Lockhart, who's kind of centre-ish, and he reckons that there's going to be at least one rate hike this year. Then we had Fed's Williams also saying the September meeting is in play. And then over the weekend, we've had more on this. Fisher this time, who's the vice chair at the Fed, who's typically more hawkish though, and he said that the Fed are getting closer to our targets. What I will say about the September meeting, because remember let me show you the payrolls chart. Don't forget we've got 3 meetings left this year, okay? So one in September, kind of mid-September. The one after that is on the 2nd of November. And then we got the December meeting, mid-December, okay? Now, with regards to meetings where the Fed might hike, normally it would be a meeting where Yellen's got a press conference. Remember, she only has a press conference every other meeting. So she has a press conference in the September meeting, no press conference in November, and then a press conference in December. So the normal pattern of things would therefore indicate that if the Fed are going to hike this year, most likely it's either going to be September or December. Further on that, November the 2nd meeting is literally 6 days before the general election in the US. So it's highly, highly, highly unlikely the Fed are going to make a move 6 days before the election. So, you can pretty much write off November. So it's either in a few weeks' time, the September meeting, or they've got to wait for December if they want to hike this year, of course. Now, look at this payrolls chart. The reason why I'm showing you this is obviously we've had two very punchy numbers the last 2 months. So July, 255,000 jobs created. June, 292. Really rebounding aggressively from that 7-year low print we had for May at 24,000. Now, we do get one more payrolls number before the September meeting. And if it's a big one, and it might not be, but if it is, let's say anything above 250, then you've got 3 big payrolls numbers in a row. Do you know what happened the last time the Fed had 3 big payrolls readings in a row? They hiked, because that was in December. We had October data, 295, we had 280, we had 271, and they hiked. So, it is possible, obviously, that the Fed hike. However, markets are only pricing it at 22% at the moment. 22% chance the Fed hike in September. We've currently got a 51% chance that they hike in December. Okay, so what's Yellen going to say at the end of this week is very important. This Jackson Hole Symposium, this is an annual event. Now, it's significant because of the fact that Fed chairs in the past have used this annual Jackson Hole meeting and their speech at that meeting to actually deliver some pretty significant policy changes. Not actual policy action. They're not going to change rates on Friday, but it's about guiding us to what they're going to do in the future. So it has been used as a key speech in the past to pave the way for significant future policy. So is Yellen going to be hawkish like her colleagues? And really, are we going to see a substantial increase in the probability of a September hike as a result of her speech or not? If we do, if she is hawkish, then there's definitely grounds for some movement, because as I said, there's only a 21 or 22% chance of a hike at the moment. You're not really getting the dollar or T-notes pricing in a hike. Let's have a look at some of these currencies. If I just switch my charts now to currency charts, we've got cable top left, we've got euro dollar top right, we've got the dollar yen bottom left. You have not really seen dollar strength, and in fact for most of August, in fact if you look at the euro, I guess you can't really look at cable because obviously Brexit here is the dominant force, so forget the euro, but look at euro dollar here top right. I mean, actually what's happened over the last 3 weeks or even 4 weeks is this market's been trending higher up to 114. We almost hit 114 last week. We got a key top, anything around 114.50, and indeed 115 has been an important level in recent times. Then that's very much top end of the range for the last 12 months for the euro dollar. So, and we're right up towards the top end of that. That's dollar weakness. This is not pricing a Fed hike in September for sure. So if Yellen is hawkish, let me just add another level in here, which is the August high, which was set, no, sorry, not the August high, resistance at the start of August at 112.56. If Yellen's going to be hawkish, a break below that, we could easily see this market back down towards 110 by the end of the week if Yellen's hawkish. Of course, traditionally she's not. Traditionally she's dovish, so we'll see if she offsets what her colleagues have been saying. And are markets right? Because currently markets are very dovish and as I said, 22% chance of a Fed hike in September. The Fed have been more hawkish, but that's been the way of things for the whole year really. So anyway, Yellen on Friday is the big event for sure. Right, let's talk about oil. Maybe the most interesting market of the session so far, and probably the most interesting market of last week, and indeed the week before. It's a pretty remarkable run here as we hit $40 as we went into the start of August. In itself, this sell-off was extraordinary. $52 mid-June, 2016 high, reversing back to $40. And last week on Friday, we topped out at 49.36. So in the 5 days last week, big upside every day. In the 5 days last week, oil went up 9%. And if you go back to actually just 8 days, in the last 8 days, not including today, in the last 8 days, that's going from this 42 handle that we tested on the 11th of August, the oil price is up 16% in 8 days. This is massive movement. And of course, it's been triggered by this, commentary about the fact that maybe OPEC are on the brink of, again, agreeing on an output freeze. I say again, so no, they haven't agreed on that. But they've been threatening to agree on an output freeze for the last 6 months. Those of you that haven't been in the markets for long, you go back to February and March and April, and one of the big catalysts for global markets, all asset classes, was, are OPEC going to freeze output or not? Are they going to try and force the oil price back higher? This is when we were trading down in the $30 region. So let me just refresh my screenshot quickly. So, big upside for oil over the last 8 days off the back of this kind of thought that maybe OPEC might freeze, except that what's happening this morning is you got some pretty big downside for crude. And that's because you got several stories. So firstly, Iraq ready to ramp up production. So what's happening here in Iraq is that we're expecting to see an increase in exports from Iraq of about 5% in the next few days, after an agreement to resume shipments from 3 oil fields in Kirkuk. Now, this is about 150,000 barrels a day that are going to be added to Iraqi exports. So that's obviously negative for price. You've got the Baker Hughes rig count again climbing. And we've seen the Baker, this is the number of rigs that are operational in the US. And they've been up for 8 weeks in a row. And in fact, we've seen the rig count go up for 11 of the last 12 weeks. Let me just actually show you. 1 second. Let me see if I can bring a chart up for this. Here's the Baker Hughes rig count number. 1 second. Let me get this shot. If it'll let me. So you can see here right at the top of the screen, this upside we've had in the last 11, 12 weeks has been quite consistent, back up to 600 rigs, and the highest we've seen is just above that. We shall see on this, but certainly this is another negative for price. And then we've also seen in Nigeria, we've had some real problems with internal conflict in Nigeria, presenting a real headwind to actual production. And so we've seen a potential ceasefire being agreed, being declared in the oil-rich Niger Delta. And so this again is positive for output from Nigeria. So you've got kind of 3 catalysts here helping to drag oil lower this morning. And this is off the back of a phenomenal run to the upside over the last couple of weeks, as we've been speculating as to whether OPEC are going to freeze production. So there's definitely some decent downside potential here for crude, especially with some dollar strength as well, off the back of some Fed hawkish comments over the weekend. So dollar strength, you've got some, really a trio of positive output stories that are keeping oil under pressure. I'd maybe look for resistance on the way back up. If you want to try and identify any short entry points, we'll perhaps look at the low point that we had on Friday at Friday morning. We hit a low at 48.55. This was also the low Friday afternoon, so I reckon that's a pretty decent resistance. We've already caught a bit of resistance there earlier this morning when we were breaking lower, but we're just finding some rough support around S2 and $48 at the moment. But certainly oil, a market to look for and look towards today as a lead, okay? Because otherwise we've got very little information flow coming from anywhere else. Okay, so that's it. I think I'll leave it there. Keep your patience today. Keep your powder dry. News flow is probably going to be quiet, and we're really building towards that, what potentially could be a very dramatic event, which is Yellen's speech Friday, 4 p.m. All right, for now, enjoy the day. Thanks.